With just 48 hours left to close off 2024, many may be wondering what Bitcoin has in store for 2025, as well as the broader crypto sector. Well, if we have a look at Bitcoin right now, trading at $93,539, you can see that the volume has dropped off massively, and Bitcoin is looking like it's right on a knife's edge, about to drop down to the lowest support level. So in today's show, we'll have a look at what this means leading into next year, whether altcoins still have a chance to pump into 2025 as suggested by the prior data, and we'll have a look at where the Bitcoin and the crypto market has deviated from what we've previously seen at this point in time as per the prior cycles. So let's get straight into the show content. Smash the like button, hit the bell notification, and subscribe to the channel. And I think one of the first things we need to look at over here is the stock market, which previously, when Bitcoin had its most recent drop a couple of weeks ago, was under immense pressure due to the actual stock market. And if you look at the S&P 500, the NASDAQ on the top right, and then the Dow Jones Industrial Average on the bottom right, it seems to be a lot more stable than what we're seeing structurally compared to Bitcoin. Still maintaining that uptrend with high highs and high lows. We do still have, of course, on the NASDAQ as well as the S&P 500 on the top charts over here, the presence of a rising wedge formation, which is traditionally a bearish formation. And we started to show signs, at least on the S&P 500, of breaking that down over there, but we did find horizontal support. So we'll need to monitor this leading into 2025. If there is a broader breakdown over here, of course, that could add immense pressure into crypto. Now, the biggest concern with crypto, which is not abnormal leading into this seasonal period, that being over the Christmas, New Year's period, where most of the world that do go on vacation and their minds are off of the charts. Well, one of the bigger concerns is the drop off over here in the daily exchange volumes. Now, again, it's not completely out of the normal, out of the question. It's just that structurally, we wanted to see this defend that $100 billion mark. And you can see this is now dropping multiple days and holding this underneath this line chart underneath that $100 billion mark, which is a little bit of a cause for concern. So we need to see new volume come back into the market very, very quickly, maybe during the Trump inauguration happening in January, as well as around the FOMC meeting, that we could see some sort of rate cut as well as quantitative easing stimulus that comes back in, and that could easily push us back towards the upside. But as it currently stands, it's without a doubt structurally the charts don't look great for Bitcoin. You can see the bearish divergence that occurred all the way back in 2021 within that cycle over here between the RSI and price. Well, we're actually structurally printing something very, very, very similar, which is why we need to see that volume come back in to essentially save the day and for Bitcoin to start to take out those prior highs and have continuation of the trend. Failure to do that does mean that we could see much, much lower prices, and at least on some of the timeframes, it is looking bad, because you can see how Bitcoin's holding on by knife's edge over here, and the lowest support levels, which are most notably going to be coming in between $80,000 and $85,000, would mean that if Bitcoin does get to that level, it is ultimately going to break the stop and reversal indicator, which we have situated right over there currently. This week, it's sitting at $87,500. So if you do break that, well, structurally, you will find support over there, but you're going to start to have a potential for a high time frame downtrend beginning to form. And we know that the trend is your friend till the end of the trend, and you don't want to be betting against those high time frame trends, which currently is still towards the upside. But again, if you start to threaten these low regions, you could start to reverse that very, very quickly. We've seen a very good reset in the crypto fear and greed index, coming down to 50, which is a healthy sign. Again, if we can see that volume tick back up, reclaiming the $100 billion mark, while simultaneously the high highs and high lows form on the low timeframes, well, then this would be considered a very, very healthy reset coming back into the neutral territory. And we'll have a look just now at how the overall risk within the crypto market has also been heavily reset. And that is a little bit of hope that 2025 does play out as the post-halving year top, which we typically see. If you're comparing back to the prior cycles, remember, following the election year, which simultaneously coincides with following the post-halving cycle, that is typically the year where we see Bitcoin dominance drop aggressively towards the downside, and altcoin season commence, and the market tends to top on extreme greed. We haven't yet seen that. We're still anticipating that that could come next year. So if you do have a look at this over here, you can see that the funding rates have also come down heavily alongside the volume, which is, of course, one of the healthy signs over there, flushing a lot of the leverage out of the market, flushing the late buyers out of the market. And now we need to keep an eye out on this. If this does flip negative whilst coming into strong support, that would actually be a strong buy signal, just like we've seen previously throughout COVID, throughout the FTX collapse, the USDC DPEG, and again, the yen cash and carry trade unwind. So within this crypto cycle, we've only seen 3 of those environments while in a strong uptrend that we had negative funding. Now, another thing that I'm keeping a close eye out on is the USDT dominance. Now, the USDT dominance you can see is range bound over here, but from a high time frame perspective, when zooming out, this still is forming part of a massive uptrend coming into a strong 7-year support level. So we'll keep an eye on this. If this does drop this level over here, which we're currently coming into resistance, you could see a move down lower towards the support level around that 3.7% zone. That would bring new liquidity into the market, and you should see that volume rise and prices run up. But the fact that it's trading up over here towards the resistance zone, threatening to possibly flip this into support, is another cause for concern. And the reason why is, if we go out onto, let's go in the 3-day time frame over here, I can showcase to you what previously happened. The vertical lines running down the screen over here, each of those tests into that yellow upsloping trend line has resulted in major cycle tops. Now, if I can just remind you what happened in 2021, you can see 2021, this was the exact cycle top within this region over here. Price bounces and moves towards the upside. And we, of course, do have the same print over here as well, with the bearish divergence between the RSI and price on the weekly time frame in 2021, just like we have right now, while simultaneously coming into some of those key levels. Again, this just shows the importance of why we need to see something come into the market that will bring back that at least hope and newfound volume and momentum that can get prices moving once again. Otherwise, apathy will persist and you'll continue to see prices roll over, which is what we're seeing over here. Again, it looks heavy, and your next major supports are coming down towards the $85,000 zone. This would be your interim first area of support, depending on when you hit that level. And then your next level of support, and that's coming in, by the way, at the 0.382, your bull fib, which is commonly an area where price does find support. Now, if you do lose that area, you do have very, very strong support in the form of the blue moving averages over here. That's your 200 EMA and your 200 MA, and those should simultaneously line up over here with your 50% level of the range, at which point you're looking for support to come in at $78,000. Now, remember, nothing ever moves in a straight line. So if those high time frame bearish divergence were to play out, we should still inevitably see a massive bounce from this region, which would lead into a complacency bounce and a lower high, maybe failing below this $108,000 region. If that does happen, of course, then you're looking for a deeper drop over there and prices to go much lower. Now, we can see over here, if you look at Bitcoin as well, on the 4-hour time frame, you do have also between the 50 and 200 EMA a bearish cross, which is currently taking place. So this solidifies what we're seeing over here, that you are most likely going to revisit that $85,000 region, and you should expect that prices should come down towards those support levels. If we look at the total cryptocurrency market cap, well, we're still trading above those prior all-time highs from 2021, which is one good sign. We can quickly go through to total 2 as well. You can see total 2 is yet to take out the 2021 highs. Total 3 also has wicked briefly above 2021 highs, and it does have the horizontal support coming in at about $825 to $830 billion market cap, an important level to hold above. You have the others, which refers to the altcoin sector, back testing into that breakout level over there and holding that as support. So an important level to constantly see price holding above. We'll tie this in with the Bitcoin dominance in just a moment. If we do see Bitcoin dominance rolling over, this should drive this towards the upside, and then that would make things play out just like we saw in the price cycles. And what we have seen in the price cycles is this, right? Don't bet against 2025 in Q1. And the reason why is because, again, in a post-halving year, this is what you typically see. You expect price to top out in that post-halving year, so 2017, 2021, and then you can add 4 years to that, which would take it into 2025. And we tend to see a very, very strong Q1. So although the market doesn't look great at the moment, things can definitely very, very quickly turn. And when we simply use this tool over here, which looks at various different things, various different on-chain metrics, social metrics. You'd look at market cap risk, fear and greed indexes, running return on investment in terms of where we are in the timing cycle, YouTube views. It collates all this information into one easy to read chart, which simply is color coded and suggests, are you in extremely high risk environments to be getting into the market, or are you in low risk environments, or is it business as usual and the market's in a normal zone? Well, the latest value suggests that we had 0.43, and remember the market tends to top at 0.9 to 1. So think of this as a percentage. At 90 to 100%, the market is extremely overheated and tends to top. As it currently stands, we're sitting at about 43% in terms of the risk metrics, which you can see is theoretically still before you get those cycle peaks, right? The cycle peaks tend to occur in the 80 to 100% region, as I've just popped onto the chart over here, and we haven't actually seen that at all, not even once within the cycle. So that would bring some, at least much needed hopium, that you would see continuation of the price cycles trends. And again, if you just overlay this cycle in comparison to the price cycles, that is the one thing that brings a little bit of at least hope that the market will continue towards the upside and the cycle is not yet over, right? Since many people would only have entered into the cycle recently, they will be feeling heavy pressure if they didn't get in as early as we did, all the way back at the cycle lows. So again, we do need to see that volume come back into the market. This is possibly one of the most important metrics, because this actually shows physically whether people are putting their money where their mouth is and depositing capital onto the exchanges. Remember, this is the daily exchange volume with a 7-day moving average, showing how much volume is being traded on exchanges, how much volume and capital is moving onto that exchange. And if this number goes towards the upside, you can see that the market is optimistic, and we need to see that optimism come back to remain in line with what we've seen in the price cycle. So the expectation would be that if price cycles, we should be seeing a cycle peak or top somewhere around October of 2025. So another important thing to be looking at, of course, is the Bitcoin dominance, which has been range bound. We've been focusing on the trading range from the high to the low over here. And ultimately what you can see over here is the pink line is the range high. The middle one over there is the mid range. And then we have the range low. And then we're specifically looking at the 0.786 and the 0.618, which is a common rejection point using a Fibonacci retracement zone. So we had price move up over here, or at least the Bitcoin dominance move up, and we did get that rejection. In terms of the low time frame, this is your 4-hour time frame. You do have the start of a downtrend with, of course, a peak over there, and now you're starting to put in those lower lows and lower highs. So if we can see continuation of this breakdown, again, this would bring optimism back into the market that things are actually playing out like we saw in the price cycles, where we expect a strong Q1, and then specifically we see a big altcoin catch up, right? But it's really important to look at how things play out together, because simultaneously you'd want to see that USDT dominance also break towards the downside. So the best time, or the best case scenarios, is when you see Bitcoin form a strong range. This range could be anywhere between about $80,000 and $110,000 mark, where you see Bitcoin over 2025 range within that territory, while simultaneously USDT dominance breaks down. And simultaneously, you have Bitcoin dominance breaking down like this. And if we do get that breakdown, that should allow for the altcoins to catch a bit. Now, we'll remind you over here what we've seen previously within the Bitcoin dominances. Essentially, you have 3 years of up or sideways, followed by 1 year of straight down. So we're still waiting for that 1 year of straight down, which is why, although it feels incredibly uncomfortable, if you are playing the cycle out as per how the price cycles have played out, then you would want to be looking to have your exposure into the altcoin sector more heavy at this point of the cycle compared to let's say 1 or 2 years ago, where you would have wanted to be very, very heavy into Bitcoin, since the Bitcoin dominance was, of course, trending towards the upside. So only time will tell what's going to play out, but essentially we're playing at level to level, and we do have the start of a low time frame downtrend over there. Now we can also look to some of the high time frame charts, as well as the majors within the crypto sector, such as Solana, right? Solana is finding major support over here. It's really, really important that Solana does start to break back up above some of those key levels, most notably above about $210. But if you do use our moving averages, we have the 3, the 9, and the 30. You can see, of course, Solana was one of the first to move into the downtrend, which means that it could be one of the first to bounce out of these zones. And I'll show you why in just a minute. So coming into support into the 30 MA, which is now rising, plus you have the breakout level of the range high coming in around that $200 mark. This is a key and important zone where you do want to see that support found. You want to see closing candles above here, and then form that high low and continuation onwards and upwards. When you look at the posturing of the moving averages in comparison to Bitcoin per se, well, you can see Bitcoin is only just now losing the 3 and the 9 moving average, and it means that major support comes down towards the 30, which is of course rising each and every single candle close, which means that it could meet up in a couple of days time around that $80,000 to $85,000 mark, which we said was major support. So there is a lot of free space underneath here, where Solana is showing a bit of a different picture, which again shows that maybe that Bitcoin dominance is actually going to break down. If we look at Ethereum as well, Ethereum is closer to its 30 than what Bitcoin is. Bitcoin was very overextended from the 30-day moving average, and we can quickly take a look at maybe a couple of the other majors. Let's have a look at, for example, let's have a look at quickly. We'll go to NEAR. Let's see what NEAR is looking like. Okay, NEAR coming right into the support level over there. We'll have a look at some of the older coins like Cardano. Cardano looking similar to Bitcoin, also far extended from the 30, which is coming down at about 56 cents. We'll have a look at Matic. How's Matic doing? So Matic also coming right into support. So you can see there's a little bit of a different picture when it comes to the altcoin sector. Most of them have not overextended quite as far as what Bitcoin has, which shows that maybe, just maybe, you will actually get that shift out of Bitcoin. So although things look bearish on Bitcoin, it's not the end of the world for some of the altcoin sector. However, you have to be very, very careful with how you play the market in this type of environment, because typically, and the majority of the time, altcoins move as a higher beta play compared to what Bitcoin's moving at. So if Bitcoin goes up 2%, altcoins go up 5 to 10%. If Bitcoin goes down 2%, altcoins go down 5 to 10%. But there is that sweet spot within the market cycles where there is this decorrelation, and you see Bitcoin going down slowly in a controlled fashion, specifically, where then altcoins have this opportunity to rally. So 2025 will be really, really telling. What you can do as well, if you haven't already, you have just 48 hours left to guess what the price of Bitcoin will be. Of course, the fact that we're only 48 hours away from the yearly close means you have a massive edge over here to guess the price of Bitcoin. If you guess the price of Bitcoin correctly, as per on Coinbase, as the clock strikes 12 on the 1st of January 2025, again 48 hours away, you can win yourself an entire full Bitcoin. You can see the majority of the guesses right now are situated between this $98,000 and $99,000 mark for the end of year close. So you can put in multiple guesses. Remember, go to the link in the description below and participate in the Winner a Bitcoin competition. Guys, this is quite a hard competition to get together. We have to give away essentially $100,000 to one lucky person. So use the link in the description below. Each of these exchanges will qualify you for a guess. And you can actually put in one guess on each of those, and you get a sign-up bonus on each of those exchanges, anywhere ranging from about $10,000 to $30,000, depending on which exchange you actually specifically chose. So I'll catch you guys all in the new year. I hope you have an absolutely wonderful New Year's. I hope you had a blessed Christmas with your friends and family, and volume should return sometime within the 1st to 2nd week of January. And I think that's where we'll see where Bitcoin is headed next. So that's it from me. Smash the like button. I'll catch you all on the next one. Have a great day, and cheers for now.